Welcome to Factful Finance, where we break down complex financial concepts into actionable insights. Let me ask you, what happens when the stock market loses $4 trillion in value in a matter of weeks? Can that lead us into a recession? You might be wondering if we're headed toward a major economic downturn, especially after recent market turbulence. Well, today, we're diving deep into the $4 trillion stock sell-off and its potential impact on the economy. This is a critical moment in finance, and it's shaking investor confidence everywhere. We're seeing the S&P 500 down 8% from its February high, with the tech-heavy Nasdaq confirming a 10% correction since December. The drop isn't just numbers on a screen. It's a reflection of shifting sentiment in the markets, spurred by policy uncertainty and fears about trade wars. The big question, is this the beginning of a recession or just a correction? Let's break it down. First, let's understand the key driver of this massive sell-off: tariffs. President Trump's aggressive trade policies, particularly the tariffs on Canada, Mexico, and China, have created a fog of uncertainty that's difficult for businesses, consumers, and investors to navigate. And as a result, companies are scaling back their forecasts. Delta Airlines, for example, slashed its profit estimates by half, citing increasing economic uncertainty. Big players like Tesla and Nvidia have also seen dramatic drops in value. Tesla alone lost over $125 billion in one day. But here's the thing. This sell-off isn't just about tariffs. It's about a broader economic uncertainty that has many investors questioning the future. The U.S. stock market had enjoyed a strong run-up in recent years, with optimism fueled by tax cuts, deregulation, and pro-growth policies. But now, with volatility on the rise, some are asking, could a recession be on the horizon? Now let's zoom out a bit. When we look at historical market trends, the S&P 500 is still significantly above its long-term average. Even after the recent sell-off, stock valuations remain high. The S&P 500 is currently trading at a price-to-earnings ratio of over 21, compared to its long-term average of 15.8. And while this may seem concerning, it's important to recognize that stock markets often go through periods of correction. Here's where it gets interesting. Recessions don't always follow a predictable pattern. For instance, some experts suggest that the current market downturn could be triggered by a variety of factors. Not just tariffs or political uncertainty, but also elevated valuations and shifting investor sentiment. So while it's too early to declare that we're officially headed for a recession, it's crucial to acknowledge the warning signs and prepare accordingly. So what does this mean for you? First off, if you're an investor, the message here is clear. Stay informed and stay flexible. A correction is uncomfortable, but it can also be an opportunity to reassess your strategy. Diversification, risk management, and understanding your own financial goals are essential in times like these. Let's take a closer look at a real-world example. Amelia, an investor who was heavily concentrated in tech stocks, saw her portfolio take a hit during this recent market downturn. Instead of panic selling, she took a step back, reevaluated her asset allocation, and made adjustments to protect herself from future volatility. The key takeaway? Managing risk and staying calm in the face of uncertainty is critical for long-term success. So, what's the takeaway here? We're not certain if a recession is imminent, but the signs of a slowdown are clear. If you're an investor, keep your eyes on the horizon, stay diversified, and make sure your portfolio aligns with your risk tolerance and long-term financial goals. What do you think? Are we headed for a recession, or is this just a temporary market correction? Drop your thoughts in the comments below. I'd love to hear from you. Remember, this content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. If you found this video helpful, you'll definitely want to check out the next one. We're diving into more strategies that can help you navigate these uncertain times. Click the video on screen now and keep your financial future on track.